Hey everyone, welcome back to Corporate Decoder, the place where we break down complex financial documents to give you the real story behind the numbers. And today we are diving deep into AVITA, Medical Incorporated latest 10. Okay, annual report, let me tell you this one has a few interesting twists and turns you won't want to miss before we jump in. If you love getting these straight to the point breakdowns of financial news, make sure you are subscribed and hit that notification bell. And if you want to chat more about these filings and get early access to transcripts, join our Discord community linked in the description below. Alright, let's kick things off by looking at the company's financial picture as of the 31st of December 2025. This report shows that AVITA Medical Incorporated had total assets worth $56.4 million. But hold on a second, total liabilities clocked in at a hefty $73 million. That means the company is currently sitting on a deficit of $16.7 million. Yikes, not the best starting point. Now let's talk about revenue for the year ending the 31st of December 2025. The company reported $70.9 million in sales revenue. This is up from $63.9 million in 2024, a pretty solid 11 increase. So they are selling more products, which is good news. But here is where it gets a bit dicey while sales went up. The cost of those sales also jumped significantly by 41% from $9.1 million in 2024 to $12.8 million in 2025. This means that for every dollar they earned on sales, the cost to make or acquire those products went up considerably, eating into their profits. This difference between sales and the cost of sales gives us gross profit, and while it did increase slightly from $55.2 million to $58.8 million, the increase in costs means their gross profit margin actually dropped from 85.8% to 82.1%. This is like getting a raise at work but your expenses going up even more. Now let's look at operating expenses. These costs are what it takes to run the business day to day, and here we see AVITA Medical Incorporated has been making some adjustments. Sales and marketing expenses dropped by 9% from $58.2 million down to $53.1 million. This suggests they might have scaled back their sales team or marketing efforts, which could explain some of the revenue. UA growth stabilization though, it is still growing. On the flip side, research and development expenses saw a slight increase going from $20.4 million to $20.8 million. This indicates they are still investing in new products or improving existing ones, which is a positive sign for future growth. Putting it all together, the company's net loss for 2025 was $48.6 million. This is an improvement compared to the $61.8 million loss in 2024, so they are losing less money, which is a step in the right direction, but still a significant loss. Now for some really important news that happened after December 2025, on the 13th of January 2026, the company secured a new credit facility for up to $60 million. This is a big deal because it replaced their old debt and immediately shows they are committed to getting the financing they need for operations. This new loan has a higher interest rate but also provides more flexibility, which is crucial given their financial situation. Let's talk about the company's overall strategy and outlook. The report highlights their focus on growing sales penetration in US burn centers and expanding the use of their RECELL system for traumatic and surgical wounds. They are also working to commercialize new products like Cohelix and PermeDerm. The good news is revenue is growing, but the bad news is the increasing cost of sales, and the fact that they are still operating at a loss means the path to profitability is still a challenging one. AVITA Medical Incorporated is also heavily reliant on stock-based compensation for its employees and executives. This is common in startups, but it means a significant portion of their expenses are tied to their stock price, which can be volatile. Looking at the outstanding options report, we see a lot of options outstanding which could dilute existing shareholder. SIF, exercise. So what is the story here? AVITA Medical Incorporated is in a tricky spot. They are growing revenue and improving their net loss, but they have a substantial amount of debt and their cost of sales is a major concern. The new credit facility is a positive step, but it comes with higher interest payments and strict covenants they need to execute flawlessly. On their growth strategy to manage their debt and eventually reach profitability, the risks are clear, but the opportunities in the wound care market are also significant. It's a high stakes game. Now looking at these results more broadly, AVITA Medical Incorporated appears to be in a turnaround situation. Their revenue growth is promising and the reduction in net loss is a good sign. However, the high cost of sales and the significant debt are major weaknesses. They are investing in R&D, which is a strength, but they need to see that investment translate into more profitable products. Soon the company's direction is focused on expanding its product portfolio and market reach, which are solid strategies, but their execution needs to be spot on given the financial pressures. Notable risk include their reliance on new financing and the competitive landscape in the medical device industry. A key opportunity lies in the growing demand for advanced wound care solutions. In conclusion, AVITA Medical Incorporated is a company with potential, but it is far from out of the woods. Their financial health is still precarious, and they have a lot of work ahead to achieve SU's attainable profitability. The new credit facility provides some breathing room, but the real test will be in their ability to manage costs and drive profitable sales growth. What do you think about AVITA Medical Incorporated's future? Let us know in the comments below if you found this deep dive valuable. Please give this video a thumbs up and subscribe for more breakdowns like this. Thanks for watching, and we will see you in the next episode of Corporate Decoder.